morning. It's Monday, October 23rd, 2023. Right now it's 9:33. Market opened and we are at a slightly down today. Stock futures fall on Monday as 10-year Treasury yield tops 5%. Wow, went through 5% already. That is a problem, I would say. Not a big problem, but that certainly is a problem because the cost of borrowing just get way more expensive. So especially anything with a floating interest rate, a variable interest rate, they're really paying a lot more. So yeah, that's not a good thing. So naturally, your stock market, which are forward looking on companies earning, well, guess what? When it costs more money to borrow, interest rates high, then it cuts into your profit. Simply like that. Yeah. So this is why stocks and bonds has an inverse relationship. More like stocks. Interest rates goes up, right? Stock market goes down. Of course, bond price goes down too, but really is that the stock market, the equities market. Remember that business, right? They borrow money to not only sustain but to expand. When it's expensive, well, they borrow less, or they also need to continue to service the existing debt. And if they have a floating interest rate, that will definitely cut into profit. They can turn a profit into loss because it costs too much to repay the debt. Yeah. So that is why we have this down market today. It's been a long time, last time 10 years over 5%. Yeah. So we'll see how, I mean, the market just opened. We'll see how that really will goes. Apple Corp why in generative AI boom to spend $1 billion each year to catch up. Okay, that's interesting. AI is the next big front. Chips is the next big front. So, yeah, that will be interesting. Because it's going to a ground of sensitive. It's just more people dying. So sad. Bond, which is coming back. Bitcoin trade above 30,000. Okay. Micron is building the biggest chip factory in US despite China ban and smartphone slum. Okay. Yeah, I mean, chip making is the next big race. Who control the chips? Going to control. It's going to replace, not necessarily replace, but it is what equivalent of what used to be oil in the 70s now. So about it's going forward. It's about chips. Look, let's take a quick look. Q. Wow. Well, guess what? It's a double bottom, but this is where I'm looking at to draw this down trend line, maybe a potential support line. That's maybe a potential support line. Yeah. So it's going to fall below, and then this is where the next level is. It makes sense. It's right here too. This area. So we can draw in. I'm looking for the area box. Yeah. Is that again? Been a while. Actually, hold on. Right here, I have a box. This purple is a box. So we went through that clearly. That's kind of like a very long-term box I had, huh? Oh, all the way back here. This box it went right through that box. Okay, with that, this box, we'll remove that box for now. Now, where's my box tool? There it should be here. There we go, rectangle. All right, so I want a box here. This is the general area where it might coincide. And this general area is what I will be thinking. That will be a 1, 2, 3, 4. Yeah, potential nice hot stop here before anything, but market is pretty good. Yeah, this is why with the market and the sector index behind my back, any breakout become a false breakout. This is why I did not took the trade, and that was a good call. And I explained why last week I didn't took this trade on the breakout. Right? This is just a false breakout that didn't work because the market is not behind my back. So just stuck itself by itself. It's very difficult market collapse, which is what we have now. I'll go for 21-day moving average line right now. Here, my histogram is turning red, so not a pretty picture. Flying long. Apple approaching 200 days moving average. Meta. Okay, Meta is rather interesting. For all these Thor's hammer. THOR. Thor's hammer. Not forced. Thor's. Yeah. Sorry, my English is my second language, so as you can tell, I have an accent. I always need to practice better whenever chance I get. So, in this sense, this is... I should do this. This will be a better line, connecting all these bottom. There we go. There. So, this is still uptrend, making Meta potentially the better choice for eventual breakout. So market behind the back, technically. Yeah, Tesla earning came out and that was bad. Yeah, I reviewed it over the weekend, and basically they just really keep, although they have ramped up the production increase, but they had to cut their pricing to be competitive, and that's really cutting to it. Cutting to their profits. So after that, it just broke through. So the play now is no longer looking for the up because it break through this triangle. This compressing, right? This compressing and break right through. Now I am looking for the other way around, upside down. No, I can't just flip this over. Looks like. Okay, so let's take this out. I'm looking for retracement and then looking for a short in actuality now. So I can take out all this, looking for long, no longer looking for long. I'm looking for short. Yeah, see this broke, and then if we bought here, and this is where the trend falling will fail because eventually it broke down, it broke through this, and you have to get out. So that was a trend falling trade that would have failed. Let's remove all the colors for now, and we can say I'm looking for this, and this was a failed trend falling had I took the trade. Yeah. So, did it really fail? The question is. First of all, it was no false hammer. So eventually, if I go back in on this trade and a breakout, no, didn't make a new high. Came back. Was there a trade at all? Eventually, yeah, there was a trade. But here's the problem. That wasn't a trade. That did not trigger the trade. I have a lower low on the MACD That was not a trade. That should not have triggered a trade. That would have been, okay, lower low on the MACD telling me that there's a divergence, which means should not have a trade. Even if this was a trigger, I need to, but this get invalidated. I need, yeah, so that was invalidated. And also going to earning, so this got invalidated because of this. Invalidated. Because of the MACD, basically. So that trade should not have trigger. Okay, so that was safe in that sense. And going back here now, I can pretty much say I'm looking for a retracement. And then Thor's hammer, then I can open a short. Yeah, you have to find, when market breaks down, then you should be looking for short or long or the other way around too. Depends. You sell the weak, you buy the strong. So on the turn, then you look for the strong. Right now, market's breaking down. The direction of the rate down. So we have this. Yeah. Amazon. So these are the weak one. All right, but there's a double bottom. Not bad. Yeah. Netflix. Netflix is an earnings surprise. I switch to the ad model low price. That works. A lot of people is on that, and they're going to increase price monthly subscription on both the standard regular and the premium subscription by $199, $2 each account. I guess they like it. Earnings came out and blew through the 200 days moving average. Yeah, so that was that last week. Again, I take a look at it over the weekend and come to see what had happened. When I take it, earnings coming up on Microsoft. We'll see how that go. But I don't really have any nice uptrend trade right now. Matter of fact, it makes me want to play options. Makes me want to sell options in that sense. Still early, but the Oracle just got destroyed. Yeah, after post earning, second leg down again. Yeah, the video. Let's see what's the video doing. Yeah, that's my Heikin-Ashi chart. On the Nasdaq, coming in, big momentum bar coming in. Nasdaq, just coming in. Yeah. Dow is down. Well, 180, 200 points going to, which is only 56%. Oil is down. Dollar yen, right at 150, as I said. It's going to go for that 150. It's going to go for that 150 psychological level. Right at here now. Yeah. So on the Heikin-Ashi, which is really a trend, momentum down, right? Everything just broke down. Everything just so that will be no trend falling on the long side for a while now. This is right in the middle. Google. So yeah, but still in the bull section. This is a medium line on the Heikin-Ashi. This will be considered bullish above that medium line, and that will be considered bearish. So relative terms, it's not absolute. Yes, and my average true range staying low. Okay, yeah, compressing that is good. So yeah, we'll see. But we need to turn green for it to do anything. And that really more also, I use this of a exit signal, more of an exit signal, more or less a very helpful exit signal, because when I try and change, that's how you should execute your trade, right? Right here, like for example, I bought into this red bar, right? Although it's still in the bullish sector, but it's turning to red. I mean, okay, I gotta really think about exit. Yeah, so in that sense, this is a little bit hard one because 1, 2, and 3, and it turned green. Usually 3 bar consecutively, I would just really exit the trade. But then the fourth one, in this one again. So this one will be a late exit. If I'm a little bit more on my toe, right? This even is a little green is a doji style indecision, and the next one is right. That is actually continuation of these last exit here in that sense. If I have a long I'm talking about, but I'm just showing example. How I read is I look for 3 consecutive red bar after a nice trend. 1, 2, and 3. This one, even it carry over, yeah, that will be exit because next one will be like this. Right? And then I can always let it do this. Oh, okay, it come back up. Right, next I can re-enter the trade and try to ride that again. But 1, 2, 3. I guess 1 bar, a little green, is because it's a doji star on that indecision. Then the next doji star, yeah, get out first, and then you can always think about reestablish your position. But I use this really good exit. You want to give me a heads up on exit when to exit a profitable trade instead of holding it and then turn a profitable trade into loser. Right, that's another part of trend following is that beside you get false breakout is the turnaround. So you got to find a good exit strategy too. That's the other aspect of trend following. To build a good trend following system, a big part is your exit signals. Yeah. So everything is in the dogs right now. Yeah. Wow, Neo, BYDDF, right? So these trade I roll, I close out. I bought some shares on each contract, and that was that. Not adding any more position because they're dogs now. They're really getting cream across the board. So that was a fundamental trade. So wait for the turnaround to add more in actuality on the China EV manufacturer. And so yeah. Okay, that's about this morning. Yeah. So that's that this morning. So again, okay, Apple is paying the catch up. Apple is on track to spend $1 billion per year on developing its generative artificial intelligence products. Apple is looking to use AI to improve Siri. Oh yeah, please do. Although I'm not Apple product guy, but they have the niche, they have the followers, they have the fans, and they trade pretty well, the stock. The spending company plays catch up to some competitors who have already developed new AI product and features, such as Google, Microsoft, and Amazon. Yeah, they all have these features, so they're a little late to the game, but never too late to catch up. It's a good thing. It's a good thing. So I want to talk about a little about how US dollars used to be from the 70 back to the oil, and that become world currency. So right now, US dollar is really the second biggest market will be chip, and the US government and as a whole, private sectors as a whole, US economy is also going to add using chips as the next big thing pegging the dollar to. This is why we have to keep abreast of the situation and keep. I mean, they project to for the next foreseeable 10, 20 years. Yes, the world US dollar domination will come back off a little, like a 10%. So instead of 70%, it will be a 60%. Well, wow, you have other currency that might came into play, but it's still the dominant world currency going forward. That's what they project, but who knows, right? And how do you do that besides just oil energy? You buy oil, you need to use US dollar, right? They want to do that also with the chip markets. And that's a competition. That's just a competition, a natural competition of capitalism across the world. And so we'll see. I mean, China is the big manufacturing of the world, and this is why US have all these restrictions and try to dampen its ability to produce chip, and China is going to develop their own technology. So who knows? And I think it's a good healthy competition. You have two biggest economy, the biggest economy in the world. Is having these competition, and you don't have just one group controlling everything, and you have price competition, which is good for the consumer. That's market economy, capitalism, basically. So it's a good thing. We have competition, either way you look at it. And it'll be interesting. Yeah, we're gonna I mean, every country is going to pull out all the advantage, or pull out all stops. Right? Going to pull everything they could to basically, right, dominate or continue to dominate or become the right new rising star or so, and that's just natural open market economy. Competition is a good healthy thing. It's not healthy where if you if it gets really like, in a way that is healthy. There's a healthy competition and there are unhealthy ways to compete. Basically, it's like when you compete, you don't want to get dirty. Cheat, lie, and steal. And make accusation and try to ruin each other's reputation. That's unhealthy. I would say keep it clean, keep it competitive in a positive way, and boost the world economy in that sense. This is what's so good about business is that you want to. No, I am the only winner in the world. Everybody win. Right, that's good business. If I'm the only winner, then it's kind of like a monopolizing market is bad. Right? In that sense, we don't want a monopoly. We want to have choices. In that sense, right? So that was one of the big article I read over the weekend, and that really came very interesting because if you look at how U.S. dollar can dominate for the last 50 years because it was packed to the oil, and if you need energy to produce, you need oil, you got to have U.S. dollar, and the next big thing will be chips, and so AI, everything else is going to be powered by chips. You think about it, so we'll see how that goes, but that will be the new forefront that a lot of money going to sink into, and we're going to find a lot of trade. That's what I'm hoping for, basically. The last time was the big internet, rise of the internet, and it eventually burst. It took 10 years to come back, but that was a big volatile market, a lot of opportunities to make money. And right now, what I'm trying to foresee, not just predict, but foresee is the coming of AI. Healthy competition around the world between the biggest economy, of course, namely China and US. As a trader, as a student of market, I have no bias between other country or nation or like that. All I do is try to find good opportunities, good trade, and try to benefit from it. And so that's that for today. Pretty much this morning, and we'll market movers. Yeah, we'll continue to see if I find anything of interest to trade right now. Today, the video, look, right now it's trying to come make a little back. So these are green, that's interesting, right? Although the market is the market coming back. That's what it is, basically, right? Volatility definitely spiked up on this. And today, VIX, wow, new high. But now it's tempering back down. Looks like a long tail, so maybe, perhaps, we'll eventually see a point where you need to but my bet money is going to go for these levels. Eventually play with this level until something positive comes out, especially today's 10-year treasury is over 5%. That hurt. That really hurt. I'm not bond guys, but I do not recall when is 10-year. When was last time? 10 years over 5%. In that sense, 10 years yield curve. So that's fine here. 10 yield chart. See when was the last time. I mean, let's see how far this can go back. Let's go. Well, it was a long time ago. Let's go max, right? Well, there's only go max to here, but yeah, can't even go further back. I'm thinking about 20, 30 years ago last time. 10 years yield curve historical, right? 54-year history. Okay, map could transcend it. So let's take a quick look. 10 years. When was the last time? I'm thinking 20, 30 years ago. Last time is actually even at yeah, look, all the way back in, okay, four, 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 four. Okay, right. So that was the millennium last time. Yeah. So 20 years ago. Yeah. 20 years ago. Well, the 80s was really bad during the 80s, and the 87 stock market crash and all that, right? So you have this huge spike. So keep that in mind. Where those point. Yeah. So I mean, bring the market down is fine with me. I'll just give the market more time to reset, to set up for the next move. I'm still very bullish, overall long-term bullish on U.S. market, number one economy of the world. Right. Of course, if the other countries, the second economy of the world, start picking up, I will allocate to it. I will play that game too. If the trend start forming, I will play. I will do trend for it, regardless. But I would stay with the first and second world economy. I will tell you. And I would tell you so far. I don't know. Yeah. I would say that the second world economy eventually it's going to pick up, and eventually it's just a matter of time, and a trend will form, and there will be trade in those. But right now, majority of my bets is actually in the number one economy of the world, and I always say the majority of your play should be in number one economy of the world, because this is where the money are flowing to, and that's where the trend will follow through. Like the first half of this year. Right now, it's just temporary, pause, retracement, and I expect eventually a continuation and making new high if the condition are right. So we have to look for inflation check. It might take even until end of last year. They're saying that the interest rate, we're not going to see the cut back in interest rate, right? The Fed cut back in interest rate until end of the next year, 2024. So just giving us more time to develop, search, and learn additionally how to analyze and find good setups in the meantime. And when that time comes, when it break all new high again, making new trend, that's where I'm going to stack it up, and that's why transferring really going to kick in. Right now, it's just a preparation phase. And you have to be patient. That's the thing. I came off when I started this channel, I was really trading options, looking for these high probability trade, and it works out. Those are fun, I have to say. But I missed, and I realized later on, I missed a good trend forming, and then everything started coming back. Wake up call, it's like, okay, you want to make real money? Well, trend following is the way to go. You want to make big money? Trend following is the way to go. Any fund, any investment is basically trend following. That is successful. Any hedge fund make the big buck, and we stack it all the way up. We add to the winners. I cut loose real fast. Add to the winners. That's the name of the game. Okay? That's why how to exit is very important, because you need to know how to cut the losers and how to hold on to the winners, and when to get out and then learn how to get back in too. So this is just the beginning, and it'll be fun all the way. It's gonna be fun. It's a slow process, a gradual process, but it is a very, very detailed and extremely excited process. Okay, that's it for this morning. I'll upload more if anything. If not, I will talk to everybody next time. Thanks for watching. Remember, prosperity happens never by accident. It is plans accumulated.